Is Ethereum poised and ready to hit $2,500? Well, that's what the article over from Cointelegraph goes into detail on, as it's titled 3 Reasons Why Ethereum Could Rally Above 2,500. As usual, I'll include a link down in the description below, and I'll share more of my thoughts and my opinions at the end of the video. So let's go ahead and get started. The Ethereum price has turned bullish, and the move is backed by an increase in dApp activity and protocol revenue. Ethereum's last approached the $2,400 resistance on December 9th, but failed to break through, resulting in a retest of the $2,120 support level. This time, investors are gaining confidence in surpassing this level, venturing into territory not seen since May of 2022, before the collapse of the Terra ecosystem. On December 22nd, Ether stood out with a 4% increase, while Bitcoin and BNB remained primarily unchanged. While the spotlight is on the exchange-traded fund or ETF narrative as the primary driver of recent cryptocurrency gains, there are several reasons supporting Ether's price surge that could potentially push it above $2,500 before the expected ETF approval in mid-January, although the United States Securities and Exchange Commission, SEC, might take until March. Ethereum network dApp volumes and protocol fees. Rather than attempting to predict the future, which is a challenging task in the fast-paced cryptocurrency industry, it's more prudent to analyze recent trends influencing the demand for Ether using decentralized applications, or dApps, activity as an indicator. One can start by examining dApp volumes, as some sectors do not require a large total value locked, or TVL, such as non-fungible token marketplaces, games, layer 2 bridges, and social networks. Ethereum dApp volumes reached 27.8 billion in the last 7 days, marking a 14.2% increase on the previous week. This growth was driven by a 21% gain in Uniswap and a 52% gain in Balancer volumes. In contrast, BNB's chain volumes for the same period stood at $4.5 billion, while Arbitrum amassed another $5 billion. Most notably, Ethereum was the only blockchain among the top 6 to experience a volume increase in the past 7 days. To provide some perspective, Solana would need to increase by 12 times to reach half of Ethereum's dApp's current transaction volume. In general, 20% of users account for 80% of the volume, which holds for dApps. Given Ethereum's first mover's advantage and substantial treasury for ecosystem development support, the odds do not favor a flippening in the short or medium term. Furthermore, no other blockchain can match Ethereum's protocol, which generated $95.4 million in fees in the last 7 days, excluding Bitcoin, which is not a direct competitor in the dApp ecosystem. Aside from incentivizing network security, this data indicates significant potential for increased activity following future updates, including DENCUN scheduled for January, which aims to enhance processing capacity and reduce costs. Ethereum spot ETF approval is not priced in according to derivatives markets. The eventual approval of the Ether spot ETF will set Ether apart from other cryptocurrencies in terms of regulation. Competitors have only been nominally mentioned by regulators in recent court cases against exchanges, which face charges for offering securities brokerage and services without proper registration. Finally, investors should assess the positioning of Ether derivatives traders, especially large investors and market makers. The Ether futures premium, measuring the difference between 2-month contracts and the spot price, has reached its highest level in over a year. In a healthy market, the annualized premium or basis rate typically falls within the 5% to 10% range. The current 13.5% Ether futures annualized premium suggests that traders are not taking the spot Ether ETF approval for granted. During widespread excitement, this indicator tends to exceed 20%, driven by increased demand for leveraged long positions, causing price distortions relative to the spot market. This data implies the potential for a positive price impact in case of approval, whether in January or March. Based on Ethereum's network activity, Ether investors should not yield to the pressure from contenders gaining momentum, at least not until these contenders pose a genuine threat in terms of volumes and deposits. Furthermore, The Ethereum derivatives indicator provides clear guidance that professional traders are bullish despite Ether's price nearing its highest level since May of 2022. This suggests that investors are confident in Ether's ability to break above $2,500. So one of the things that I feel that that article is really falling short on that it needs to mention is Bitcoin's halving market coming up next year. That is a huge bullish indicator historically for the crypto market in general. So seeing that we're so close to that time period realistically gives us an opportunity where the number two crypto, Ethereum, could see a strong rally up. With the price right now at just under $2,300 as of the time of me recording this video, it doesn't seem that far-fetched that we can't hit a $2,500 price level over the course of the next 6 to 9 months. Now, for a shorter time period, that is a much more questionable circumstance. I'm looking at it more objectively in the long run. And if we do go into a little bit of a shorter time span, we can go back to December 9th and see that it was at $2,400 right then. So a $100 price difference just over the course of the month. Let me know what you guys think in the comments down below. Thank you so much to my Patreon supporters. Double shout out thank you to We Love, Victor Vegas, and OzmoonX for being higher level patrons. Thank you also to my YouTube members for your support. If you're new to the channel, don't forget to hit subscribe, hit the thumbs up like button. God bless, and we'll see you in the next episode.